Hey traders, welcome back. This is a training video that I should have really gotten out a long time ago. It focuses on individuals that are just getting started. If you're starting with little to nothing, what are the best ways to go about building wealth? So we just put out a updated performance results video on our portfolio margin strategy setup. And it's a system that we're trying to shoot for about $12,000 to $16,000 a month of income off of it. We want to have that come in consistently. This is a strategy that I use personally for income purposes. It's all well and good to think that Tesla's going to triple in the next 10 years and you put some money and you sock it away. That's not what our portfolio margin strategy is. It's designed for weekly income, to pull a paycheck, if you will, off of it on a weekly basis or monthly basis, whatever you're looking to do. If we feel very fortunate that we're on track. The portfolio margin setup is generating about $12,000 to $16,000 a month. Could generate potentially $200,000 a year in income for us over the next 12 months. So blessed. I feel so fortunate and blessed to be in that position. But that's a $300,000 buying power requirement to fully implement that strategy. $300,000. And I've said from the get-go that I was a little reticent to bring that strategy and that setup to the trading room because, immediately you start to eliminate individuals that can take advantage of that as you start to bring the dollar amounts higher and higher and higher. So this is probably a video and a strategy conversation that I should have rolled out before the $300,000 one, and that is, what do you do if you're just starting out with a very small amount? Because we've all been there, and unless you were born with a trust fund or a silver spoon in your mouth, which I was not, you are going to start off with a small amount, right? And it's our task, it's our job to try to build that. And I can tell you from personal experience and personally blowing up my first 3 trading accounts back in the day, that there are right ways and wrong ways to start with a small amount of money. Unfortunately, trading is very discriminatory. The more money you have, the easier it is to trade, the easier it is to have success, the more strategies can be availed to you, and it's easier to adjust trades that don't work, et cetera, et cetera. So what do you do if you're just getting started? I know it can be depressing. It can be frustrating. I remember starting with $4,000 and my mentor had $400,000, and we would do the same trade alongside each other, maybe get a 10% return, and he would make 40 grand, which, to me was just absolutely life-changing, and I made $400. Still impressive, but, he would tell me that it was the same trade. We had made the same percentage return, but I'm looking at 40 grand versus $400. It can be depressing. It can be frustrating when you are just getting started. So I want to lay some groundwork here for you to hopefully help you focus on maybe some unique ideas, some unique approaches to investing, if you are in that position, if you are just getting started. So a couple of things that I'll share with you in terms of doing this. Number one is, yes, you can succeed. You can build $1 million balance off of just a few $1,000s. Will it happen overnight? Is it guaranteed? Does it take a lot of work? Yes, no, yes, no, yes, no. Yeah, yes, it can work. It does work. Will it happen overnight? No, it will not. Does it take a lot of work? Yes, it does. But there's a key process here of putting the right things in the right way and not making mistakes, because it is so costly. I remember, I started with 4,000, blew that account up. Scraped together another 2,000, blew that account up. And it wasn't until I sold a car for $7,000 that I finally realized, hey, it's more important to me here to just not blow these accounts up versus getting rich right off the bat. So making the right moves at first, it's so critical to your success. So a couple things to think about as you are doing this and getting started, okay? Number one is focus on trades that don't lose money. Now, before you turn off the video and say, let me write that down. So I should focus on trades that don't lose money. Wonderful advice, Scott. What I mean by that is don't look for home runs, okay? Fear and greed are the primary emotions that drive us as investors. They both can be to our detriment. Of course, greed, we understand the challenge that presents, trying to make too much money in too short of a period of time. And so one of my first trading mentors, I remember, he said, as I was learning the strategies and getting going, and he said, how's it going for you? And I said, it's going okay. I'm just not making the money that I want to make. I'm not making enough money. And he said, so your problem or your desire is that you want to make more money. I said, yeah. And he said, okay, that's easy. He said, you just need to focus on trades that make less profit. And I said, okay, maybe you didn't hear what I just said. I want to make more money. And he said, yeah, the way to make more money is to be more consistent in your results. And the way that you can be more consistent is to look to take smaller profits. Look to not hit the home runs. Just take the singles. You don't even need the doubles. Just focus on trades that can consistently not lose you money. One of the things that we're going to talk about here is prop trading. Prop trading is using someone else's money to trade with. They take the risk and they share in the profits with you. If you're taking no risk and you're using somebody else's money to trade with, you don't need home runs. And in fact, they will look to you as a trader that is successful based on the fact that you are consistent in your results, not the fact that you're making tons of money. Okay, so first thing to think about is don't focus on the money. One of the things that we talk about is in our trading community is trading to trade well. Just doing the right things at the right time in the right way, and let the profit fall where it may. So we're going to focus on high consistency trades. Those are really critical. Trades that require little to no buying power, especially if you needed to adjust them. Okay, it's a really critical aspect to our trading setups and how we trade. And as I said, trading is very discriminatory. One of the trades that I think is probably one of our best trades in our live trading community are in the money cover trades. Now, there's a lot of ways to measure the success or failure of a trade and which one's better or worse, but the Sharpe ratio, how much risk are you taking for the reward that you could potentially get? The Sharpe ratio is a great metric. It's a great way to measure that. And there's very few things that have a better Sharpe ratio than an in the money cover. To my knowledge, the market can only do one of three things. It can go up, down, or stay the same. The in the money cover trade can make you money in a position all three of those directional moves. That's about as good as it gets. The unfortunate part is that some of those trades are at a bare minimum $15,000 of buying power to get involved. And so, obviously if you have less than 15,000, you're not going to be able to do that trade. In fact, if you have 50,000, you're probably not going to want to get involved in that trade because you can't be properly diversified. You don't want to put 30 or 40% of your entire portfolio in one setup, one strategy. So we're going to look for setups and opportunities that require very small amounts of buying power. Okay. In addition to that, we're going to look for trades that require low buying power, but also have high potential rates of return. That's tough. That is really, really tough. Obviously, we can go open up a savings account and put $5 in. There's a lot of strategies or investment accounts that we could go put $5 in. But in terms of the rate of return potential, they're probably not very good. And again, generally there is this sort of opposite effect of the more money we have, the higher the potential rates of return. So we do get sometimes punished for low amounts of capital that we're trading with. So we're going to look for trades that are small trades. They require low amounts of buying power, but also have high potential rates of return. Those are not easy to find. We're going to look for trades with risk-reward ratios that create positive expectancy. Positive expectancy is just simply the understanding that historically over time, if you stick to a given strategy, more money will come in than will go out. Again, that's critical for all trades, but especially when you're getting started. You don't want to be in a position where you blow up an account because you were trading in a strategy that maybe had the potential to make a bunch of money, but didn't have a positive expectancy. Best example of positive expectancy are casinos, right? They're in the gambling business. There's certainly no guarantees in that industry, but yet casinos tend to consistently make profits. And that's because they know for every dollar that is wagered against them, they're risking $1 for $1 of profit. They have a 51 to 53.5% probability of success on their setups and strategies. And they know over time that means that more money will come in than will go out. Okay, so we're going to look for positive expectancy setups only. In addition to that, we want to look at some opportunities to build our balance on autopilot. What if you're starting off with $100? Well, there's probably not going to be a ton of opportunities to get investing with $100. But if we put it on an autopilot system where it builds and, every month maybe we're putting $100 in there, or every week we're putting $100 in there, eventually we'll get there. But that autopilot component is so critical. If you have to think about it, if you have to make that mental decision every month, okay, I'm going to make a deposit here and put some more money into this account. A lot of times it's not going to happen. It's maybe the difference between having a gym membership and having a gym membership with a personal trainer that is waiting for you every day, right? If you commit to an autopilot system, then it definitely is a helpful way to build those balances. All right, let's talk about 5 unique trading setups that I think can be a good starting place for you. So the first one that I want to talk about are the pairs trade. These are really unique setups. It's pretty tough to find an opportunity to invest in stocks in the stock market, and that investment and its success or failure is not dependent on what the stock market does. You could do a pairs trade. The market crashes by 1,000 points tomorrow, doesn't affect your pairs trade. It's pretty cool. So we'll talk about pairs trades, a couple other setups as well. We're going to look at, in addition to pairs trades, insider trading opportunities. And you say, well, wait a minute, isn't insider trading illegal? No, certain types of insider trading are, but we'll get into insider trading and how you can do that and get involved with these trades for very small amounts of buying power, $20, $30 in some opportunities, maybe less in some other opportunities. We just did one that you could have gotten involved for less than $6 into this trade. No commission charges, less than $6. And they have great ROI potential. So we'll talk about insider trading setups. I'm going to talk about something that is maybe a little unique that you're not familiar with called event contracts. These are binary events. this event is either going to happen or it won't. The two most common event contracts that we trade in our trading community are on the S&P 500, and it is above or below, and then brackets. Okay, so you can do it on a daily basis, a weekly basis, a monthly basis, but let's say on a daily basis, is the S&P going to close at the end of the day above or below a certain level? Binary event, right? Either works or it doesn't. And then a bracket. Is the S&P 500 going to close the end of the day between a certain price bracket? Okay, so these are a great way to build edge or have positive expectancy in your trading accounts. VTI, this is I love this strategy. It's an amazing passive strategy. You can do it with one share of the VTI, which is an ETF that tracks the overall stock market, and it's called the 3-indicator swing trade. VTI right now is trading around, I believe, $230, $240 per share. So you could do this strategy with less than $250. Again, no fees or commissions to trade this setup. So we'll talk about that as well. I'm going to get into scalping. Scalping's probably, of everything that I'm going to show you here, the fastest way to build wealth. We just scalped today. We scalp every Tuesday and Thursday in our live trading room. I made $1,005 today scalping with about $2,500 of capital. So if you're starting, right out of the gate, that's probably not going to work for you. You probably need about $1,000 to be scalping the Q setups. But if you don't have $1,000 of your own money, we're going to talk about prop funds, prop trading, where you can get access to as much as $250,000 of someone else's money to trade. They take all the risk and they share in the profits with you. You just have to pass an eval that shows that you can consistently trade. So we'll talk about that. Scalping, love that. SaveYourWayToWealth.com. It's peer-to-peer fractional lending backed by real estate. I use it. I call it my savings account. I love it. It's where I put my spare change every month. I've done this for over, somewhere between 10 and 12 years. I've used these fractional lending opportunities. I've averaged, again, double-digit returns on my savings. It's what I use for my savings account. And it's a great way, again, to say, hey, I don't have a lot to start with, but maybe I can start with $50 and put it on an auto enrollment system so that every week, maybe I'm dropping $50 in here, and it will build over time. So these are the 5 unique setups that I wanted to talk about. Let's get into each one of them and delve into them a little bit more individually. Pairs trades are one of the most unique trades out there. I think they are just fantastic. They have no directional bias. So again, imagine trading a stock and the profit or loss on your trade has no dependence on what the stock market does. The market could crash tomorrow. We could have a black swan tomorrow, market could crash. Doesn't affect your trade. Because a pairs trade is where we take two highly correlated underlyings, usually stocks that generally move close together, and we track the convergence and divergence of these two underlines. So we just finished a pairs trade in Amazon and eBay. And the idea with this convergence divergence is that you are going to, as you can see here, you're going to short the underlying that has pushed up a little bit too much, and you're going to go long the underlying that is pushed down a little bit too much, understanding that over time these things ebb and flow, but eventually over time they also converge, right? As they diverge, they then start to converge over time. We just, again, every trade's a little different. There's no guarantees, but we just closed out our Amazon. We were short Amazon. We were long eBay. That trade had a whopping $260, $270 in it for me. We closed it out in a very short period of time, couple of weeks, at better than a 10% return. It was almost a 12% return. It's really hard to invest in the stock market with stocks, make a 12% return in a couple of weeks, and not have any directional risk, which is what you need when you're only investing a couple $100. So the pairs trades are a fantastic way to get started in the stock market. If you had a very small amount of money and you wanted to invest in the market, if you wanted to invest in equities, I would almost always go with a pairs trade right off the bat. The only real negative I have to even say about pairs trades is that I have a hard time getting enough buying power into the trades before they hit their take profit levels. So I love the pairs trades. Those again, it's very difficult to find ways to be able to invest in the market, not have any directional risk, and be able to do it with just $100 or so. All right, next up on the list after a pairs trade would be insider trading setups. Now, these are fun trades. We talk a lot about trying to create edge in what you do as a trader, and having this type of information to help us build our trade structure. Man, it certainly helps, and it definitely builds a lot of confidence in what we're doing. What is a insider trade setup? Well, one of the things to understand, first of all, is that insider trading is not illegal. Insiders, corporate insiders, CEOs, CFOs, CMOs, highly compensated individuals, as the SEC deems them, have the ability to trade stock inside of their own company. They just need to make sure, number one, that they file a regulatory filing. It's an SEC Form 4, so that it's publicly disseminated what they're doing. They have to do that 2 days after they do the transaction. And number two, it needs to be done on a basis of not having any non-publicly disclosed insider information. And if they do those two things, then they can trade inside their stock. The saying with insider trading, legal insider trading, trades that have had these filings take place, is that there's a lot of reasons why an insider might potentially sell their company stock. Maybe they need liquidity. Maybe they're just taking a profit. Maybe they have estate planning issues. Maybe they need to go buy a home. There's a lot of reasons why they might be selling their stock. Might have a stock option assignment taking place. But there's only one reason why they purchase their company's stock, and that's because they think it is a good deal. So we pull up the Edgar filings. You can go to Edgar if you have access to that database. We take a look at those insider transactions, and you can take a look at what's happening inside of a company. One of the ones that is the most active right now as I speak, as I'm making this video, is CMR, that's Salesforce. And you can see inside here what all of the filings show, and they are pretty much universally sell. They are pretty much all sell signals. So, for example, we are looking at CRM today inside of our trading room as a potential bearish setup based on this information. Now, what's awesome about these setups for small accounts, you could go do one share of these stocks. You could go short one share. You could go purchase one share. Again, you go purchase one share of stock, no fees, no commissions. Sometimes you're looking at, $15, $20 a share stocks. It's a very, very easy transaction to be able to dollar cost averaging. So we love pairs trades. We love the insider trading setups as well. The next one is event contracts. So let's talk about event contracts. We have a lot of fun with these in our live trading room. We trade them every Tuesday and Thursday while we're in our scalping room and we're scalping the Qs. We trade an event contract. And if you are interested in trading just event contracts, if that's maybe one of the focuses that you want to look at specializing in, you can go to tradingBinaryIdeas.com and you can get your account set up. There's no cost to do that. But event contracts are binary contracts, meaning that it's like a light switch. It's either or. And we like to trade the event contracts on the S&P 500. Two of our favorite event contracts on the S&P 500 are the over, under, and the bracket. So it's very simple. You just say, hey, the market is at this level today. At the end of the market today, will it finish above or below that level? So that's a very straightforward way to do technical analyses. Are we trending up or are we trending down? So on trend days, not consolidation days, but trend days, we will do that particular event contract. And the other one is a bracket order. It says, hey, will the market finish inside of this specific range? And we look at expected moves, and that's a way to build, I think, a trade that has a decent amount of edge in it. We've had a really good success rate with these trades, and they're a lot of fun. You can trade these for $5, $10. So very, very easy for small trading accounts. So pairs trades, we love. Insider trading setups, great for small accounts. Event contracts, very fun, very easy to do for as little as $5. VTI, this is the one share, 3 indicator swing trade setup. Let's talk about this for just a little bit here before we get into the others. So the VTI is basically an index on the overall broad market. It's the Vanguard Total Stock Market ETF Index. Really is probably one of the better indicators for the overall market. You hear people say, the market went up, market went down. Well, what are you really referring to? Are you talking about the Dow? Because that's just 30 stocks. So the VTI is a really good broad-based index for the overall stock market. And we use several indicators with the VTI. We use volume. We use the MACD and histogram combined. Excuse me. We use stochastics and we use RSI. Okay, those are the indicators that we put on our chart. Excuse me. And what we're looking for here on this is that 3 of these indicators, it could be volume, it could be MACD with histogram, it could be stochastics, it could be RSI, but we need 3 of these indicators simultaneously crossing down and giving us a sell signal, or crossing up and giving us a buy signal. Now, there's some intricacies with this, but you'll see these lines that I've marked out here. There's one, here's one, here's one, here's one, here's one. So we got 5 buy and sell signals here over a 5 or a 6 month period of time. You can see right here we've got volume going down. We've got the histogram going from positive to negative. We got stochastics that's already crossed over. Stochastics is a little bit of a leading indicator, so it's usually one of the first ones to kick in. That's crossed over and going down, and RSI is going down. We've got a lot more than 3 indicators here telling us this would be a shorting opportunity here. Here's a buy opportunity. You can see everything is crossing over and heading up. We're getting buy volume coming in. Here's a sell opportunity right here. You can see everything is crossing over and heading down. We're getting sell volume coming in. That would have been a short indicator right there. Everything's crossing over and heading up here. We're getting buy volume coming in. That would have been a buy signal. There's a short signal, so on and so forth. So the VTI right now is about $211 a share. You can trade this strategy. This is a swing trade. You can trade this with 1 share. So this is a trading strategy that you can use with a couple $100. No commissions, no fees, no charges. So really like that. If you are interested in that strategy, we trade that every single week, starting this week right now, actually, inside of our live trading room. So you can go to tradelivewithus.com and participate with us in that trade. So we've got the pairs trades, we've got the insider trades, we've got the event contracts, we've got the VTI swing trade, and then we also do scalping. And we scalp the Qs every single Tuesday and Thursday in a live Zoom session. And we also have access to prop funds. This is the ability to go trade somebody else's money. They take the risk, you share the profits with them. Okay, so let's talk about scalping. So if you do want to come scalp with us, you can go to tryscalpingnow.com. Give you just a real quick overview of our results from yesterday. Now, yesterday was a very much above average day, but because we did 8 trades, 8 winners, no losers. Generally speaking, on 8 trades, we're going to have probably shoot for 5 winners, 3 losers. That's probably a typical day. But $120 profit, $285 profit, $30 profit, $15 profit, $75 profit, $180 profit, $120 profit, $180 profit. Finished the day just above $1,000 profit on the day. We probably spent a little less than 2 hours scalping those. We did 8 trades. They're all on the Qs, and we use the at the money options. That's what we're scalping. And so you never know what the market's going to bring, but we really shoot for $500 to $1,000 a day. If we're not making $500 to $1,000 a day, we're a little bummed out about our results. Again, there's no guarantees. It's up to us as traders, and the market has to cooperate with scalping. When we trade other strategies, zero DTEs, for example, we're going to do that every day regardless of what the market does. But with scalping, you need movement. You need the help of the marketplace. So sometimes we log in on a Tuesday, Thursday scalping session. There's just nothing really there to take advantage of. But yesterday was certainly a good day for us. So if you do want to try that and you want to scalp with us, that's a great way to go. $2,505 was the maximum buying power that I put to work yesterday. But of course, I was trading 15 contracts. You can trade one contract. You could trade this strategy with $25. So it's a great way to get started, again, generating income from a small account size. Scalping is probably the most aggressive way to trade a small amount of money. It's also the way to probably make the most potential profit as well. So this is probably the most active way to go. Now, one other aspect to scalping is prop trading. Now, again, prop trading is where a proprietary trading firm puts up the capital for you to trade. They take the risk. They share in the profits. Most prop firms are going to be 70-30 splits. You keep 70% of the profit, they take 30% of the profit. We use a company called Apex Funding. I think they're one of the better ones out there. They are a 90-10 split. You keep 90% of the profit. They take 10% of the profit. They take all of the risk. You can get access to up to $250,000 of their funds to go trade. So first of all, if you don't have any money to go trade, using somebody else's money and allowing somebody else to take the risk is probably a pretty good way to get started. You do have to pass an evaluation so that you can prove to them that you're not going to lose all of their money and that you can be consistent in your results. But that in and of itself is a fantastic training module. So I recommend everybody try prop trading, even if you have more money than you know what to do with and you don't need somebody else's money, because it's a great training system to learn how to be consistent. They don't care how much money you make. They could really care less. What they want to see is consistency of results, and that you're not going to blow yourself up as a trader. So if you want to have access to somebody else's money to trade, you can go to wefundyourtrading.com and get access to Apex's funds to trade with. I highly recommend that. I think it's a great training program, even if you never continue on using other people's money to trade. All right, so if you are not in our program and you're not in our community, but you still have questions, you can go to askyourtradingquestions.com and I can interact with you there. And if you want to get in touch with me, here's all my contact information, scottstewartcontacts.com. And guys, other than that, appreciate you. Hope that helped. I hope that it removed the mental roadblock that you can never, ever again be in a position to say you're not ready to start investing. You got $5, you can start investing. There's something for everybody. So hopefully that helps, guys. Appreciate all you guys. Hope you have a good trading week.